right? The haters got to hate, the maxis are going to maxi, everybody's going to do their thing, that's fine. They're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
Bitcoin could go down 95% tomorrow and stay there for 5 years. You're still getting paid.
In this market analysis, we have a massive update from Michael Saylor, who is set to share his latest insights on the Bitcoin market and MicroStrategy's position. He will explain why those ignoring his advice might struggle to buy Bitcoin in the future, as prices will become way more expensive. Michael will also discuss the heavy selling pressure driving the current market sell-off.
Some people hate volatility, right? The mainstream normies, they hate it.
Yeah.
But if you go to Susquehanna and you said, we're going to strip the volatility from MicroStrategy, we wouldn't have $100 billion, $95 billion open interest. Do you know what happens when you strip the volatility from a company our size? I know. I have another company that I started, and the other company is twice as big as MicroStrategy in revenue and twice as big in EBITDA, and it's well run, and it's just a great company. The open interest is $5 million.
Wow.
We're 98 billion as I'm speaking to you right now. So there's a big market, a $300 trillion market for, fixed income, coupon generating, principal protected, low volatility instruments. There's another massive market, $100 trillion market for equity like S&P, SPY, Vanguard 500, QQQ, that kind of, something that gives you 15, just beat the S&P performance. And if you do it with less vol or less risk, then why don't I just give you trillions of that? So there's that market. Then there's the Bitcoin market, which is, I want Bitcoin upside. And of course, there's $100 billion now, I guess, in that market right now. At MicroStrategy, and then there's the convertible arbitragers, right? And the convertible arbitragers, they're like, I'm going to buy 50 million of your paper. I'm going to short 40 million or 35 million of your stock. And then as the stock moves around, I'm going to adjust the short.
Right.
And I'm extracting that premium risk-free. And that's their thing. And that's what they do. When I meet with them, by the way, I'm like, I see you guys every, few weeks or every quarter. Nice to see you again. By the way, that thing that you shorted tripled. Like my advice, what I say to them, they don't take my advice. No, it's okay. It's okay. Now everybody's got to do their thing. The short's got to be short. The long's got to be long. The trader's got to trade, right? The haters got to hate. The maxis are going to maxi. Everybody's going to do their thing. That's fine. But what I say to them is, this is like 75% Bitcoin upside. Actually, it's like 70% MicroStrategy upside. It's 100% Bitcoin upside, no downside. Right? Like that is to say, if Bitcoin crashed 90% tomorrow, you're still getting paid. Bitcoin could go down 95% tomorrow and stay there for 5 years. You're still getting paid. It's like, you're already hedged. You're already 10x over collateralized. Why are you hedging it again?
Yeah, it's interesting.
Right? But there are some people that do hedge, they double hedge it. So there's a group of people that buy that convert and they just buy the convert, they're already hedged and they outperform Bitcoin without the risk. There's other people that, by the way, that's one type of view. There are other people, they don't want to take the risk for an hour. Literally the afternoon they're buying the bond. When the stock's moving around, they're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
Most people don't have the math, but if you're a quant, right, model the value of selling a fixed income instrument where what I gave you was a guaranteed coupon and I gave you over collateralization and principal security. But in return, I took the float, I took the vol up front. I'm getting $1 billion from you. And it's going to trade with a 60 vol, right? Anybody, it's like $1 billion flywheel spending 60 RPM. There's energy in it, right?
Yeah.
So when I get the $1 billion and it's spending 60 vol, I can probably sell the volatility for 100 million a year. Right, so you hand it to me.
Absolutely.
I'm making 100 million a year holding it. Then it's going up 30 to 60%. I'm getting that.
Yeah.
And then I've also got another float, which is another intangible. I'm holding the capital in the fiat economy, and that provides collateral for something else. When you put it all together, that means that really the spread is like 85%, 80. It could be easily 80 to 85%.
Yeah.
Okay, well, that means you sell $10 billion of that instrument. You capture $8 to $8.5 billion of Bitcoin that you stack on top of your existing equity. That's the leverage and the common. So the strategy we pursue is we strip away the risk and the volatility of the people that hate it, and we just give them something which is just better than everything else. Right? It's better than all the bank preferreds, and it's better than all the real estate preferreds, and it's better than corporate investment grades, and it's better than junk, and it's better than private credit, and it's better than, better than the S&P. It might be better than a Bitcoin ETF. We'll just give you something, how much better? 20% better, 30% better. But then we keep the rest, and the rest goes into MSTR. MSTR then does 1.5, our target was 1.5x Bitcoin, but the truth is we got to 2x.
Yeah.
Well, when we're running at 2x Bitcoin and 2x vol, like we have a vol, Bitcoin vol is 60, we're 120, 140. Plug that into Black-Scholes, right? But, what that means, by the way, is if you look at the call rate, if I sell an at-the-market call 30 days out on IBIT, you generate 100% interest. If you sell the same call 30 days out on MSTR, you generate 220%. And it's insane.
That is insane.
MicroStrategy has made another big move by acquiring 562 Bitcoin for approximately $561 million, paying an average price of $106,662 per Bitcoin. This adds to their impressive Bitcoin performance, with a yield of 47.4% for the quarter and 73.7% year-to-date. As of December 22, 2024, the company now holds a total of 444,262 Bitcoin. These were purchased for a total of about $27.7 billion, at an average cost of $62,257 per Bitcoin. This bold investment highlights MicroStrategy's long-term confidence in Bitcoin's potential as a store of value and a hedge against economic uncertainty. With their growing holdings and impressive yield, the company continues to solidify its position as one of the largest institutional investors in Bitcoin. MSTR is all in on this digital asset, making waves in the crypto world. Don't forget to like and subscribe, and let's keep this bull run going.